All right, thank you. And it's great to see a pretty full house for this very exciting debate. So, banking as a service is the only way banks will survive in the digital age. So, to the right, we have Vladislav Solodkiy, CEO and managing partner of Life.SREDA. Life.SREDA is one of the first non-corporate fintech-only venture capital funds, and it has made 22 investments in the US, Europe, and Asia. It has made 7 exits. Current holdings include Basis, which is a banking-as-a-service platform in Asia, and Rocketbank, a leading neobank in Russia. And to my left, we have John Sun, who was on the stage earlier, and he is the co-founder and chief credit officer of Chicago-based Avant. And so Avant is an online lending platform that applies algorithms, machine learning protocols, and analytical tools to create tailored loans for individual borrowers. Avant has served more than 350,000 customers and lent more than $2 billion since 2012. So let's get this debate started. And so my first question for you guys is, how much disruption has it really been for banks from banking as a service? And actually, before we go into the debate, I'll get Vladislav to actually tell us a bit more about banking as a service, because it's a fairly new concept that was introduced only a couple of years ago. So to get us familiarized with the concept first, Vladislav will just give us an overview.
Thank you so much for your introduction and the opportunity to talk about this very important topic today here. I think that we have to spend more time to describe about about the role of banking as a service platforms here, especially in Asia. Why? Because right now so many places like Singapore, like Hong Kong, trying to promote themselves as FinTech hubs, or Japan just joined this race, South Korea, but in several years, maybe in 1-2 years, we will see that most of the startups will die. And why it will happen? Because to be launched here, I mean across Asia-Pacific region, as FinTech company, it's very hard, it's very expensive, and it's very long in terms of time. In comparison with US or UK market, why it's happening here? Because there is no bank-as-a-service platforms here. For example, if you want to launch a fintech company in United States, you already know that you can go to Bancorp or CBW from Kansas or BBVA Compass. They will be happy to host you. They will provide remotely their open APIs to be integrated with their backends directly. Finally, you will be launched in 3 months. You will invest 20% of your resources, human resources and money which you just attracted from your first investors. And after that, if you will decide to scale from US to the UK, it will be the same story. Such old players or new players like Solaris Bank or IBAN First or U-Account, they will be happy to provide you open infrastructure, not to reinvent the wheel. In Asia, whole countries still do not provide their open APIs or on government side, like PSD2 regulation in the UK and in Europe. Whole banks still closed in terms of their infrastructure. You have to be connected with them directly. Finally, you have to spend 3 months here to talk with different C-level guys from different departments. After that, even if you will be agreed with them, you will spend 3 months more to talk with their IT director, because IT director will never care about previous agreements. And after that, you will spend 6 months more to build your direct connection with their backend. Finally, you will waste 1 year of your life, and you will waste 80% of your resources to be launched. And even if you will be the king of the hill, if you will be the leader on your domestic market, after that your investors like Life.SREDA will push you to go to other markets, and it will be nightmare for you, because it will be new bank, new C-level guys, new IT director, new IT infrastructure, and everybody here, even such big companies like Alipay, WeChat Pay, they are not successful in terms of scaling. I think that bank as a service It is an answer for scaling, and scaling it is the biggest question for today for FinTech, especially here in Asia-Pacific region.
So essentially, there's an unbundling of the suite of services offered by banks and a redelegation of the different components. And because I was just looking at a well-known model for banking as a service, and it was something that was introduced from you guys actually. So from Chris Skinner, who's part of the Life.SREDA team, and so it essentially provide so we have I think. Yes, a slide from you up here, which essentially shows banking as a service in a 3-layer model. So would you be able to just quickly tell us a little bit about that to get everyone on the same footing before we go into the debate?
Our vision that you as a bank do not need to compete to build your FinTech services inside. Vice versa, you have to work with FinTech companies. But FinTech cannot exist only in Hong Kong or only in Singapore, only in Japan. FinTech, it is part of digital world. In digital world, you always have to scale. You always have to provide opportunity for your local talents to expand overseas, and vice versa, to invite foreign companies like Avant to come to your market. You can ask John, is it easy to come to Malaysia or to Singapore right now? It's not so easy step to scale, and our vision is to let each bank in each Asia-Pacific country have to be connected with some kind of independent middleware, which consists from open APIs. It is like Esperanto language, and after that, this platform have to give out open APIs for FinTech startups, but not only for FinTech startups, for telcos, for messengers, for e-commerce giants. And it will be the same effect, like same result, like Amazon Web Services showing right now. In 2012, it was the same hype around e-commerce industry, like right now it's happening around FinTech. Several giants told at that time that infrastructure, it is our competitive advantage. Jeff Bezos from Amazon answered, come on guys, you are stupid. Infrastructure will never be a competitive advantage. And he started to lease his infrastructure for new players, even for his direct competitors. And right now, 67% of profit of Amazon belongs to Amazon Web Services. The same story here. Banks already invested thousands or hundreds of millions into their licenses, processing centers, card issuing centers, compliance services, and they can continue to fight with the future with FinTech startups, or they can be opened for them, and they can use this leverage of third-party providers not only across their countries, but across the world.
Okay, great. Thank you for that, Vladislav. So, John, what is the FinTech perspective on all of this?
Yeah, absolutely. And I kind of find myself somehow on the other side of this debate, which is kind of interesting for FinTech. But just to give you guys some background, Avant has 2 main lines of business. So we're a lender that's in a way going to benefit from kind of this banking as a service trend, and really already do, because we utilize banks for a number of kind of outsourced functions like bank level regulatory compliance through web bank. We use our merchant bank and ACH capabilities to be able to kind of issue loans and collect payments. And certainly we're well integrated into kind of this banking as a service ecosystem. But on the other hand, we're also a technology provider to banks, right? So from that perspective, in the equation, we're not so much using a bank as a kind of banking as a service relationship, whereas we're more of a software as a service provider to the banks, right? And I think the delineation on that and what's going to drive which relationship ultimately prevails is really in the bargaining power in the relationship. And I think Vladislav has made some really good points on why FinTechs would love a world where banks operate all as regulated utilities in banking as a service type relationships. But I think the real question is, do they want to, and more importantly, do they need to survive? And personally, we just don't really see that as a necessity in the near future, and here's why. Banks today are pretty good at serving customers that they want to service, which is the prime and super prime consumers. It will be very difficult to dislodge those particular customers from banks today. Banks have a natural advantage in that they have extremely low cost of capital from deposits. As a result, they're able to service these customers with products that fintechs can't really compete on. In order to compete in these markets, we essentially provide software as a service relationships to banks to allow them to use our software instead of the other way around. So that's the first thing. The second thing is banks have a lot of different lines of business. So if you look around, basically all of the fintech startups are focused on what we call kind of retail and consumer banking, which is basically a third of a global bank's real business. So in addition to that, there's kind of wholesale operations, lending, money management, that's another third. And then there's global banking and capital markets, and that's another third, right? And there's really nothing on the horizon that's going to cause massive disruption to the bottom two-thirds of the iceberg, if you will. If you think of kind of retail banking as the most exposed part and everyone's kind of attacking that particular area, there's all of this stuff below the waterline that is going to be extremely difficult to disrupt. A data point there, so I don't know if you guys recall, recently HSBC had gotten in some trouble over some failed AML, anti-money laundering procedures that resulted in like $230 million worth of accounts that shouldn't have been opened, and they basically got a slap on the wrist for it. And to us, that sounds like a lot of money, $230 million of accounts that shouldn't have been opened. But the reason for that was $230 million out of $87 trillion worth of business they were doing, right? So it's a very, very small portion of the overall business. And even if you look at retail, banks have been surprisingly resilient. They've changed substantially over the last 30 years. They've kind of adapted to the market. If you look at the evolution of products that banks are able to offer, so back in 1970s, they introduced credit cards. In 1983, Household created this concept of a home equity line of credit. In the last 5 years, you kind of have same-day ACH. So banks are continuing to evolve their product suite. And we think in the future, how they're going to continue evolving their product suite is by partnering with technology firms like Avant to basically bring some of that tech in-house while still maintaining their advantages over the prime consumers.
Great, thank you, John. So, Vladislav, are banks evolving enough? Or do they have to adapt to meet this model?
I think that right now, I just want to add to John that Avant and other companies, their advantage is not only in terms of technology. Their advantage in terms, to my mind, in terms of relationships. They're much better than traditional banks how to serve their customers better. I think it's very important because sometimes banks thinking about fintech companies on new technologies, fintech technologies, like how to save our money, how to make our expenses less than year before. But it's not true because fintech, it is about new user experience, how to provide more services just rather than just financial services for your customers, how to, like, for example, with personal financial management tools. Is it about accounting? No, it's about how to set up your short-term, long-term goals, how to choose different financial and not only financial, because education it is also some kind of tools to achieve some aims in your future. I think that right now banks are not so active. They're trying to compete with the future. They're trying to protect their role on the market. But it's very interesting. We came to Singapore 2 years ago. When we asked leading local banks, are you afraid about fintechs? They answered no. Right now, if you will ask them, are you afraid about fintech companies? Still no, but we're afraid about Alipay and WeChat Pay. Because valuation of Alipay higher than the biggest bank in Singapore. They can buy any bank in Singapore and they will have a lot of money for rainy day. And this is example how you, if you will be not fast enough, smart enough, opened enough for new technologies, you can lose your role. And once again, bank as a service, it's not about how to make from your bank commodity bank. It's about how John just explained. It's about how to originate for them new revenue streams, but also give them opportunity to think about new businesses, because for sure banks, they provide some value for market and for customers, but they do not need to do everything.
Okay.
FinTechs, they're providing opportunity to pick up different cutting-edge solutions and to create bundles based on your platform. Bank as a service platform.
Great. So, but let's look at the middle layer. So, the middleware, bank as a service, that layer. So, so that is essentially made up of application programming interfaces. And so, these application programming interfaces, how much value is it adding to this entire chain? You could have like a model where you had standalone banks, standalone fintech companies that would oversee the entire chain of services. But here you have fintechs on one end, you have banks on the other end, and you have this middle layer. So application programming interfaces. And these things are essentially like the engines that you use to find hotel rates, to find airfare. So engines that help you to find the best deal out there. So in the banking space, how much value is this actually creating?
We have to talk about value for both sides. I mean, for fintechs, for example, if you want to launch your neobank or challenger bank in your country, you do not need to apply for your banking license. You do not need to create your processing center, card issuing center. You just have to think about how to attract customers and how to talk with them. What kind of services you want to add more than just commodity services. If you will use bank as a service platform via open APIs, it's so easy like to create new Facebook page. I mean, you just have to copy paste some lines of code into your app. That's done. You already integrate. For sure, you have to proceed with several compliance processes, but it's much easier than to create one new bank once again. But even if you will create one more traditional bank, how you will differentiate it? There is no difference between one bank and another bank. And for banks, it's opportunity not to work only with fintech companies inside your country. It is opportunity to be opened for any fintech company across the world. Second one, there is no bank today in Asia which is able to cover a whole region. FinTech, they're looking for how to be launched across whole region. And if your bank will be integrated with some bank as a service platforms, you will not need to compete with other traditional bank in your country. You can scale as a bank to other countries too.
Okay. And so John, what are your thoughts on that?
I mean, I think the theory behind them is great. I think if you look at the reality in at least the US and UK today, they're basically adding zero value. There's not really an open standard for data sharing between banks and fintechs and consumers. If you look at the most common way of acquiring banking data in the US is still through services like Plaid and Yodlee, which essentially goes out and scrapes data from the bank's websites and maybe has integration with some of the top banks on a ad hoc, very specific relationship basis. In the UK, there's famously kind of this new open banking regulation that forces banks to some level of compliance with the open API standard that forces them to essentially expose some amount of data that's kind of accessible through certain APIs, and then gives them the option, if they want, of introducing kind of a paid level service, which exposes more data, right? So I think it's going to be interesting to see what banks choose to do in terms of compliance, because if they really just do the bare minimum, it's really not going to add much value. But it is certainly a test if banks are willing to go above and beyond and really create this ecosystem of data sharing, then it's certainly going to kind of create a lot of new advantages for fintechs. I think one of the challenges there is what incentive does the bank really have to expose all of their data to FinTechs that are then going to kind of take that data and monetize it and use it to compete with the banks, right? So my personal thoughts is I think there's going to be some banks around the edges, especially the challengers, that are going to comply kind of fully and really roll out a whole suite of products and really become the banking as a service go-to banks, similar to kind of BankBox in the US or a similar type of product. But on the other hand, the mainstream banks are going to be more protective of their data, do less to comply, and really maintain their competitive advantage by essentially not complying.
Okay, so let's go back to the subject of this debate. And banking as a service is the only way banks will survive in the digital age. Yes or no? If no, what is an alternative model that you see stemming out of the relationship between fintechs, banks, and the whole ecosystem out there? And so a case in point would be that of Solaris Bank, which is a middleware provider, but at the same time also has a license to operate as a regulated bank. So I will get John to start off. And so a 1-minute summary, please, and then I'll get Vladislav to finish off.
So I think banking as a service will become a new business line for the banks in a certain way, and there's going to be basically niche middle market banks that are going to focus on it as a primary service line for those particular banks. Similar to how there's industrial banks today, there's commercial banks today, there's going to be a class of banks geared towards enabling fintechs, and I very much think that's going to happen. But the retail of the bank of 2017 has been very different from the retail bank of 2000, and it's going to look very different again in 10 years. But that doesn't mean that all of them are going to migrate towards these back-end kind of banking as a service type models where the fintechs operate the consumer-facing elements of the front end, and the banks just provide almost as a regulated utility services. I think banks are going to continue to evolve, and they're going to continue to partner with technology providers like Avant to bring a lot of these capabilities in-house. And at the end of the day, they'll evolve, but they'll survive.
All right, thank you, John. Vladislav.
I think that banks have to look once again on Chinese market. In China, traditional banks already lost their competition with new players. And they have to find their role in new ecosystem, in new landscape through these bank-as-a-service platforms. Why? First of all, they are not able to create whole possible fintech services by themselves. Second one, even if they will provide their own open APIs, as John just mentioned, it will be not a standard because it will be one more APIs from one more provider on the market, limited only by your own domestic market. What is the value of this open APIs? It will be that solution. Value of this middleware lies in terms of common agreement, how to connect different countries with different regulations with new players. And I think that, yes, especially in short term, if we will not solve this problem of infrastructure, lack of infrastructure, especially here in Asia-Pacific region, we will see that most of fintech startups here, they will die. And banks also, they will lose their role in the market, not in competition with new small players, but with big giants from China or from US.
All right, wonderful. Thank you, Vladislav. So that brings us to the end of the debate. So please give a round of applause to our two debaters. And banking as a service, I'll leave that to the audience to ponder whether it will be the only model for banks to survive in the future. So keep an eye on that space. Thank you.